Okay, good afternoon to all of you. Today we are going to focus on difference between investment and trading, and to some extent clarify on stop loss profit target and what is it that separates a bull and bear market. Okay. Now we will go from the reverse side, that is from the indicator side, bull bear market indicator. We will also look at stop loss, what stop loss means for different set of investors, whether it should be applied for investment or what should be done as far as trading is concerned. How do you decide on profit target, and also what differentiates between an investment decision and a trading decision, right? So we will first look at we are not talking about the technical aspects of the market, because from the fundamental side, I think the valuations take an important stage, and there are different metrics by which an asset class is considered to be on the buy side or on the sell side, particularly as far as equities is concerned. The way the metals and crude and commodities are analyzed is different from the way the equities are analyzed. Now, index also is a composition of the equities. So it is also traded in terms of the PE and EPS and whether it's rich or thing and what the earnings are going to be there, what is the growth pattern. So all those things, macro growth and company growth, all those things will decide on the fundamental side. So that can also be used. That's more for the investment side. Now, if you want to consider on the trading side and also investment as a trader, okay, from the trading perspective, we will look at the charts and look at what decisions and which asset classes and how to go for investment. Now, one classic example of indicator which is now used if you are in a bull or bear market, there are different ways. One is the technical side and another is the statistical side. So on the technical side, generally they use the simplest thing that they use is the moving averages. So now moving average, the biggest is 200. So this is normally used in a daily chart to know that what is the overall big direction of the market. So now whether it's Nifty or Bank Nifty, I think all of them are trading above the 200-day moving average. So we can say very safely that the big trend is on the upside. Then they come towards the 100, 50 and 20. Okay. Now the short term thing, this 20 moving average generally is used by those who want to shift the positions and probably look towards some dip and then go for a buy. All those things, adjustments, they wants to do some adjustments, they probably use a 20-day indicator. Then there's another investor who normally feels that if the market sustains below the 50-day moving average, then the short term trend is down. The short term trend is down. Then other set of people feel that the market can come up to 100-day and then bounce back. So normally if it trades above all these moving averages, there is a chance that it can come down to any one of that and probably look towards taking support and moving up from there. Now if you are an investor, then very clearly you have a choice to average out everything at these four levels, because now people will be asking, what are the good levels to go for an averaging? Okay, that is where the investment decision comes. Then we will look at the trading decision, because trading can be classified in terms of intraday, it can be classified in terms of position trading for a few days, for a few weeks to month, and probably probably carrying it for a longer time also. Now if you are looking at an investor, some people feel that as far as index is concerned, generally they will go and buy right up to even average at 20, 50, 100. If it's a bull market, normally it will not come below 200. So normally they go for 20, 50, 100 moving averages. Okay. Now if you look at the Nifty pattern also, since last year when it started moving up, the fall has been contained more or less at around 100-day moving averages. 100-day moving averages. So let's look at the chart from that perspective and see to what extent an averaging can be done if the market falls up to that level. See, this is the chart in investing.com. If you see, a couple of times the market has come up to 50-day moving average. So 20, 50 are going very closer to each other. So there is a chance that it can come, any one of this can come at any point of time, which is right now going at 16,000, it's going at 16,138 and 15,917. So if there is a deep fall, it can come right up to that place and it can still go up. So 15,940, 950 looks to be a place, maximum place where probably we could get an intermediate. So that's the first place probably the averaging will come. The first investment can come. Okay. The second place is where the 100-day, because if you look at the 100-day moving average, always it has come closer to the 100-day moving average and has taken support and gone up from there. Now this is one occasion in the last 1 year or so. There is another, I think there is another occasion very closer to this, you can see 100, between 100 and 200. So this is another occasion when it came very closer to that. So there are a couple of times when it comes very closer to the 100-day moving average, takes support and goes up from there. So right now we can look at the 100-day moving average as the most important support, which is 15,425. Okay. So this overall it looks that 15,950 to 16,000 and 15,450 are the places where maximum averaging can take place for an investment decision in the market. So that is how you look at how you should do an average, because some will ask where are the places where I can do. So just wait for 20 and 50, because 100 also comes sometimes and 100 doesn't come sometimes. So as far as broad market is concerned, I'm talking about it. So each will vary from stock to stock, and let's look at Bank Nifty also. So the investment as far as the large cap or the large cap mutual funds, or as far as the investment is concerned, you should do closer to the between 20 and 50 and then look up to 100, because there is a big gap between 100 and 200. So I think probably it may stop very closer to the 100 and start moving up. So these are the places where an investment decision can be considered. Now, since we are talking about investment, question is that for an investor, should you look towards a stop loss? Okay, that's the thing. So now for an investor, I think I leave it to you, but generally speaking, over a period of 3 years, if it all depends on what time frame an investor has. For a period of 3 years and 5 years, normally the markets give positive returns. Equity markets give a positive return for a period of 3 to 5 years. And over a period of 3 to 5 years, generally speaking, you get a return which is approximately 10 to 12% per annum. So this is also how the broad market is concerned. If that be the case, then in that case you don't need to be afraid to put a stop loss. Only thing is that you can go for increasing your investment at every fall. And at every fall, when you're talking about it, what are the falls percentage that normally, from the statistical point of view, that you should do? One, generally speaking, the fall comes closer to something like the first fall is around 5%, then 8 to 9%. So all the corrections this time that has come has stopped around 8 to 9%. So a good place for investment, it looks as if the first place of investment looks to be something like a 9%. 8 to 9% is something which probably looks to be a good place where to start the investment. Then if you want to progressively increase that, then 8 to 9% probably can come to 15 to 16%. Index falling below 25% has been only 2-3 occasions in the last 10 years. One, the Lehman collapse, then the pandemic. These are virtually big incidents on the global scale, and even from this point of view, the markets have recovered significantly. If at all such a thing happens, then at that place also we should be in a position to invest some equal amount of what we invested earlier. So an investor should consider 8 to 9% and 15% or 17% as a place where you should invest. If it goes down to 25% also, you should invest. Wait calmly, you will make money. Okay, and you will get a return. If you invest in these places over a period of time, you will get 12 to 15% per annum even in the broad market. So an investor putting the stop loss is his choice. The reason why I am saying is sometimes it comes down and then only to go up, because you put the traders have the knack of trying to ensure that your stop loss is taken off, weak hands are shaken, and the market is taken up. So we have seen always that that is collapse below an important support point, and after that the market bounces back even on the same day or on the next day, and we have seen this many times, that the break of important support levels does not mean a complete change of trend. Okay, and it is done even sometimes intentionally to suck off the weak hands, whether on the bull side or on the bear side, and then only to take the market up. So you need a little bit of patience and a different type of strategy to overcome those problems. So as far as investor is concerned, that's a clear case. Now, whether investor should put a profit target, again the issue is, if you put a profit target, you never know. See, this time the market rallied very significantly and it continues to rally. Where will you put a profit target? And if you put a profit target or even a stop loss thing, you will only end up buying again above that level at which you had put the stop loss. Now, let me say this example. Let us say this is at today. Yesterday it closed at 16,568 or so. Let me say I'm just putting a stop loss based on last 2 days lows, because normally generally take as a 2 days low as a possible place to put a stop loss. So if you take a 2 days low, then it comes to 16,495 or so. So let me say I'm putting at 16,495. Then when I try to buy, most of the time I will end up only buying above 16,495. It will come down to 16,350. Okay, that was the last important support, resistance. So that will offer a support. It come to 16,350. By the time you recognize something, and within a few minutes, normally these days happens, it just goes up and comes back very swiftly. It goes to 16,350, and then probably it can swing back to 16,495 or above within an hour or so, and probably you may even end up only buying above that level. So 90% of the cases it will happen. Only in some cases it will look as if, no, we should have put a stop loss. We should have put a stop loss. So if you put like this, then in that case eventually you will have to be very careful to see that you have to keep monitoring to see that, no, even under 200 rupees down from where you put a stop loss, if you get, you should go for a buy. That's how the present situation of the market is. So we have to go along with the situation of the market while we reading the technical indicators. We cannot isolate the present situation and then say you do like this and do like that. So right now it looks the market is still on a bull side, in a very significant bull side. So we should, after putting a stop loss, we should watch for the market, monitor for the market, and whenever it falls to some important low levels, you should be in a position to grab the market and go up. So that important level probably could be a 20-day moving average, which is coming at 16,150 or so. Because of the operation of algo trade and system trade, these days what they do is that the moment it comes closer to that particular place, they just go for a buy straight away. So there is a chance that probably this they may give a support close to 16,350. Otherwise, this is 16,350. Or otherwise, they may just break this place 16,150, 160 by 10-20 points and then take the market up. So the moment it comes very closer to this area, we should be looking towards a buy side rather than a stop loss. So right now, is the stop loss, if you want to put it, then you should put it based on what probably you are looking at for a trader. You should look at, if you're trading the market, the stop losses can come based on an hourly chart. If you are looking for a big investor, then in that case it is better, if you are trading Nifty and Bank Nifty, I think it is better to look at more towards averaging out the buying rather than looking towards a stop loss at the present juncture. Now, how do you put a stop loss at some stage? It is better that you take slightly, now the stop loss concept can be applied through an option by going in for slightly deep out of the money option. So what is the deep out of the money option that you need to prefer? Is that something like a 15,950 or 16,000? Because that's a place where probably we don't expect the market to trade lower than that. So even an investor should just put a 16,000. There's no point in wasting too much of money in options also. But you need for a tail end risk. That is a situation which can turn ugly. And that place is going to be 15,950 or so for the time being. Even if it goes below that, there is a chance of 15,400 offering support, but we do not know. So what you should do is that you should ideally put in a stop loss in form of an option. So if you are a buyer, you should just buy a put option at 15,950 to save you from an exigency. So what always you should do is a stop loss should come as a tail end case. A stop loss should come when you feel the market can probably hurt you in a very significant manner, which is beyond your ability to take. So now if you are trading one contract of Nifty, which is 50 units, and you are buying at 16,500, and 500 points below that, it's going to matter something like 25,000 rupees. So if you are able to take that 25,000 rupees risk, and probably if it falls below that, you are willing to roll over the positions also, then you should apply only a 16,000 put option, so that you don't need to waste too much of money. In between levels, what you should do is that you should if it comes down, then in this case again you should go for a, suppose the market goes to 16,250, you should again go for a 16,250 buying of the futures or whatever it is, or keep the position intact and go for a 16,000 put option again. So we should be very careful not to waste too much of premium on that, and so you can probably look towards whether you want to do a weekly option or whether you want to do a monthly option. That you can think about it, but the strike that normally you can take right now for a stop loss is around 16,000. That is how the stop loss should be defined in terms of the tail end risk. So when we say what is the importance of stop loss, the importance of stop loss for investment decision should be a tail end case, which probably for a lot of people will mean a fall below a 50-day moving average for a short-term shift in the trend. So investment means, I told you, pick it up at every moving average. If you are a trader with some good with a good perspective of the market going up, then in the case you put 16,000, which is the 50-day moving average, as a stop loss. Now, as far as taking profit is concerned, I think investor doesn't need to rush into taking profit, but a trader probably has to apply his own logic. What is the logic that you need to apply? That we will look at it now. Suppose, let us say this is a daily chart. So in the case of a daily chart, probably you can look at if it cuts either 2 days or 3 days of low. So here the 2 days low is coming at say 16,495. So 16,495 is one particular case where probably you can look towards cutting the position. Now also you can look at, I've already told you that you can also look at a super trend indicator as one area where probably you can look towards taking stop losses. Now where does those stop losses come as far as super trend indicators concerned? Now I told you as far as the moving average is concerned. Now we will look at where probably it can head towards as far as super trend indicator is concerned. Now So now this is the super trend indicator. Normally, you see the 3 times the ATR generally holds as far as super trend indicator is concerned. Now this is coming very closer to 16,205 or 206. So the bigger change of the position probably will not happen. I think it will still hold between 16,204, because last time also if you see this super trend indicator is held, and even only once we have seen this in the last couple of times, only 1 or 2 times we have seen breaking of this 3 times super indicator. So I think more or less if it breaks, then for a considerable period of time it is below that. So our understanding is that probably we can hold on to 16,205 or 206, which is the very important place. Now if you want to see whether the market has topped out for some time, then in that case we have to look at an hourly chart. Now for a trader, now the hourly for stop losses for an hourly trader, it is like this. So this is the hourly chart as far as super trend indicator is concerned also. We'll look at the hourly chart. So now it has come down up to the 3 times indicator. Now if you see, it is now exactly sitting around that particular place. So most of the time, if this particular place is broken, then we can say the high on a day level is made. High on a day level is made, right? So the high on a day level is made. So this is going to be a place where probably we are looking at some sort of a shift, and also this has come below the 20 moving average as far as the daily chart is as far as the hourly chart is concerned. So in an hourly chart, because you have to, if you are a trader, the stop loss that you need to put should be quite fast, because the fall is not going to be much. After that, the bounce will take place very fast, because if it cuts, then the 50 moving average probably somewhere at some 16,450 will get support, then 16,330 or 340, 350 levels will get support. So you cannot afford to put a stop loss too far. Now already it has come a little far off, and right now it is at 16,538. So if it breaks the 16,538, you can presume that some sort of top has been made at 16,700. At 16,700, some sort of top has been made. So a stop loss has to come on a break below 16,538 for a trader. Okay. So for trading, what we are doing is we are applying, in this particular case, a break below 20 moving average and a pivot break below a 20-hour moving average. So what is the stop loss for a trader? The stop loss for a trader is a super trend indicator, which is on an hourly chart, okay, or one pivot point below the 20 hourly moving average. Now if you see the 20 hourly moving average, it is here, and if it starts cutting below this, then in that case we are going to have a further fall. So please keep in mind, this particular place will be will serve as an important stop loss point as far as the Nifty is concerned. Now there will always be some whipsaws. Unfortunately, we cannot get away from most of the whipsaw issues. On the hourly chart also, we can have a lot of whipsaws that can come. See here, this is the place where the whipsaws do come. Okay, so we may have some losses in doing this whipsaws if we go on a trend following system. But still, trend following system is much better than going for anything else. Only thing is, if you have a way, probably you can decide which is the better way to avoid this sort of a sideways motion. Then in that case, probably you can be a little more successful. But for that, you can also use a combination of Fibonacci ratios and all. So normally we have seen a big this one, that is from here, which is 16,160. So let's look at the consider this as going to be a very important pivot support. So then in that case, we can look at the Fibonacci from here. So we need to have a combination of some thought process to ensure that we don't make much of a problem. So right now, see, we expect now the first support, now it has closed below 16,572, which is the 23.5% retracement, 16,494, 431 and 368. So we expect important support to come closer to 16,368. And if you want to cut off the position right now, I think since it has already fallen below the 23.5% retracement, which is at 16,572, I think, and also this being this particular high, this is this high, which is 16,587. So considering that, I think we should now look towards closing of this position. We should look towards closing of the position on any fall which is below this particular level, 16,538. Okay. So how are we applying this? We are applying this with the help of one pivot close below the 20 moving average. Then also we are using the 3 times super indicator, which is also giving a feeling that this support, if it is broken, it will come down. Already the Fibonacci ratios are coming closer to 16,494, which is the next support. So 16,570 or 572 being broken, I think also it gives us an indication of this. So the top may be made on a daily basis on if the close is below 16,538. So wait, then in that case, if you are a trader, you put a stop loss at that place. You put a stop loss at this place and wait for a further fall, and then look at how it's going to rally. Probably the 16,350 could be a very important place from where the next sort of rally can take place. So that is as far as the trader stop loss is concerned. Profit target, I have told you, if you are an intraday trader, all those things we are going to look at next week. But if you are going to be an intraday, if you are going to be a trader looking for the way the market behaves and then taking the profit, then you cannot identify that I will exactly take 16,700, because there is a chance that 16,700 may be exceeded, it may go to 16,900 also. So the profit target can be more defined in terms of a trailing stop loss rather than identifying a blind profit target, because we have seen in this bull run or in a bear run, all levels are, which are being projected can always be exceeded, So there is no point in just blindly targeting one particular level saying that it will stop. You can have an estimate, but that estimate can also be crossed. So right now we should follow that the market movement, and based on the market movement we have to take a call. Question is, sometimes we can be disappointed in terms of a sideways up and down motion. That happens in market, so that cannot be avoided. The question there is that some sort of compromises we are making in terms of the gaps that we have between the positions that we are close and the positions that we enter. But that gap is happening because we want to mitigate the risk, because on some days the fall can be so substantial that we will be happy to know that we have already put in a stop loss or a trailing stop loss. For that, we have to suffer sometimes an up and down movement thing, which can probably confuse us, like what happened in what happens in situations like this. So this is the way that you can go about it, and we can look this as far as Bank Nifty also is concerned. NSE Bank. Let's look at Bank Nifty has been one of the, I think, look at the most choppy even in hourly chart. Normally in hourly chart and all, you will not have such a lousy charting thing. I think Bank Nifty these days, particularly there is one big up movement, and then after that you see very significantly a very awful sideways portion sometimes. Okay, so this is more probably in the case of stocks, it can be have much more of a problem. So now if you look at the Bank Nifty also, you can only look at in order to avoid this, what probably you could have done. Let us look at the Fibonacci ratios, and if you put it from this one is the 23.5%, 35,801, then 38.2% comes to 35,481. So we can say this 35,801 and 35,481 are no areas, and if 35,481 is broken, then you can put 35,881 as a stop loss. Suppose then there is a chance that it can come down to 35,223 or this particular. So these are levels where you have to monitor for again going for a buy position. But right now it has already come to 35,481, right? So it has already come to that place. So right now we should be now looking more towards 35,800 as an important resistance. So the 35,800 is expected to offer some resistance. But looking at this particular chart, you cannot say what is the trend that probably you will look at it, because you can look at the if the charts are very clumsy and an hourly chart, please shift yourself to daily chart and see whether there is some clarity on this. Here also you see major sideways motion except for this day. Except for this day, you can see many days Bank Nifty has not moved not moved much, and it has only confused you, and probably it has just touched the 20-day moving average right now. It has just touched 20-day moving average. 50-day moving average is closer to the same place, so there could be some support that could be expected somewhere here. So this is also a very uncouth this one. So if you see such charts, it is up to us to decide whether we should look towards doing a trade in that particular chart at that point of time, because there can be many occasions where probably things can work out, but in this particular time it is not a great trade. So right now it looks as if this particular, because this high which was made on this particular day, I think for 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10 days it has not gone above this, and it has also not gone below this particular level. So this seems to be the range, 35,350 to 36,200. I think seems to be the big range as far as Bank Nifty is concerned. But if you are applying a stop loss, then in that case the stop loss should have been the stop loss on an hourly chart could have been applied at 35,805 or 806, 35,805, 806. And right now in the super trend indicator also, even in hourly chart, it has now broken below the 10-3 hourly chart. But here if you look at it, this also keeps going up and down. See, if a movement is like this, then in that case all trend following indicators will have its failures. No, you cannot do anything from the trend following indicators. Then in that case you have to shift towards looking at the classic Dow theory, which clearly says that no higher tops, higher lows. So here this was in the hourly chart, if you look at it, this was an important high, and then this is an important high. So this high is lower than this particular high, and so we have a lower bottom compared to this bottom. So in case of any rally, we should have a lower top compared to this. We should have a lower top compared to this. So from that perspective onwards, it looks to be slightly on the downside, and probably yes, we should have put a stop loss somewhere around this particular bar low itself. Yeah. So the stop loss, how we define the stop loss, on what basis you want to do that, I think is purely a point of your own comfort. You can, if you are a trader looking for small moves and small profits, then you cannot look at big amount of difference to be made. So from that perspective, I will give you one or two important tips as far as Nifty and Bank Nifty is concerned. See, in the case of a Nifty, normally we have seen from an intraday perspective, okay, there is a shift of say 50 points. If there is a movement which is 50 points away from the top, then it falls. Okay, and after making a bottom, the bottom will be classified if there is another 50-point rise from that low. So if there is going to be a rise which is more than 50 points from the bottom, you go on the bull side, and then if it is going to be 50 points from the top, then you look towards on the bear side. Okay, so if you do this, probably the loss will be quite less. Profits when it come can be good amount of profits can be made. In the case of Bank Nifty, for intraday trading, you consider 200 points. Now 200 points is the place where probably the Bank Nifty can shift its focus in within this day itself. Now I will remove all these things to probably illustrate to you okay. So now we are free of all those charts and make ourselves clear. So now the chart looks slightly better without indicators, but still not a great comfort. Now if you look at the Bank Nifty, if it rises by more than I told you around 200, we will look at say 5 minutes chart itself. This is a 5 minutes chart. Now let us say this is a particular low. Okay, so 5 minutes close basis will go 35,663, okay, or 35,655, so around 650 levels. So you had 200 points, 35,850. So and the 5 minutes, if it remains above 36,850 or so, okay, then in that case you go for a long. So similarly, here if you look at it, what is the best close? 36,093, 30,100 minus 200, so 35,900. If it starts going below 35,900, you better look towards a short position. See, this is 35,986. So if you look at it, see 35,950, 900, 926, 921. So this is the place, 881, 880, right? So it comes. The close is approximately 893 and 900, right? So anything which goes below this, I think there is a big fall. And look at this market also, after it comes down 35,461, and it goes to by 200 points up 35,640. So 200 points. So the 200 points basically defines on an intraday basis. Okay, it basically defines some sort of an intraday bias as far as Bank Nifty is concerned. And that, if you look towards the daily basis also, in the case of a Nifty, normally the general rise or fall as far as Nifty is concerned, normally these days you see it is was getting confined to 500 points. That is a big fall. I told you in intraday basis it's around 45 to 50 points as far as Nifty, 200 points in Bank Nifty. We will explain to you again next week. Similarly, in the case of a Nifty, general fall or rise is around 400-500 points. So if it gone to 16,700, you can probably expect 16,200 also, because 500 points of fall can always be possible, despite a support which is coming closer to 16,350 levels. So 500 points of fall is one thing that you can take. Then after that, the fall comes closer to 1,100, 1,200 points, which means 15,500 approximately is going to be a very major support, or the 15,450 which we have seen earlier. That is going to be a very major support as far as Nifty is concerned, right? Now, as far as the Bank Nifty is concerned, the general rise that happens something like 1,100, 1,200 points is where probably you see a good amount of support or resistance coming. So if it has already gone to 36,200 or so, maybe a 35,000, the fall towards 35,000 can give you some immense support. So this is basically the way you look at it. So if you classify yourself whether it's going to be an intraday trader or if you're going to be a position trader. In intraday trader, I told you that if the indicator confuses you, now one indicator which I gave you is that hourly indicator, 20 hour moving average, and one pivot point cut below that you put a stop loss. Okay. Similarly, you can make a re-entry like that, and otherwise a 45 to 50 points of rise or fall in Nifty. Similarly, a case of 200 point rise or Nifty as far as Bank Nifty is concerned. Now, as far as the position trading is concerned, keep around 400 points as far as Nifty is concerned, or put a tail end stop loss which is around a 50-day moving average. Now, in the present situation, it is around 16,000 or 16,100, 200. You can keep that as a place where you can put in a put option, and then ensure that you are riding the big trend without sacrificing on ups and downs and getting confused with the noises. Because in market, normally you have a lot of noises that there could be some fall, rise, some fall, rise. So these things keep taking place in the market. So you don't want to get caught. So you just want to look at the big picture. What is the big picture? The big picture is defined in terms of the 50 moving average for a short-term shift in the market, which identify that particular place and put in a put as a stop loss. Keep that out for investment. Cut it out for investment. If you are an intraday trader, I told you a very simple point. If you are a position trader, I told you keep the 20 moving average, hourly moving average, and if one pivot point cut below that, you take it out, or probably instead of 20, some people may keep 50 hourly moving average. So use it whatever that you want. But as far as in a bull market is concerned, be careful to know that the moment you put in a stop loss, which itself will come at under 200 points from the top, the fall will be 200 points. Again, if you are a trend following person, then there will be you will buy only after the rise, and that rise will almost be equal or more than the place where you have put the stop loss. So there will always be a gap. This we are doing it only for the point of safety is concerned. Now, whatever I told you, the same principle or logic applies as far as stocks also is concerned. Only thing is that you have to identify to what extent probably the same thing can happen. Suppose if it could be Reliance, intraday trade could be something like a 10, 11 points or 12 points shift in a thing. If it is going to be a big position, then probably you say 100 points could herald a shift in the, because around 5%, 5.5% could probably herald a shift as far as the Reliance is concerned. Generally speaking, if it is for stocks, the investment will come, the first place of investment normally can come closer to around 12 to 13%, because normally in stocks have almost double the volatility of the index. So generally speaking, if the first place of investment that you can go for any stock is around 12 to 13% of fall from the top, 12 to 13% from the fall, then you have to look at something like 20 to 25%. Normally, most of the top stocks will generally not go much below that. Now, even if you see, let us look at some one or two important stocks like this. Let's look at TCS now. See, Tata Consultancy Services right now, let's say daily chart. See, this fall it came from 3400 and it fell to 3182. So there is a 200 points fall. So 200 divided by 3400, it's around 5.5%. So normally these stocks normally like TCS, normal correction could be around 5.5%. Normal correction could be 5.5%, and a deep correction means something like this. So here it went up to 3303 and it fell down to 2894. So 3303 minus it's around 12.5%. So that's why I said that no, it can come to 12.5 to 13%. So the first place where probably big stocks like TCS, no, you can look at something like 5.5 6% fall, then probably around 12.5 13%. So these are normal circumstances unless the results turn out to be bad. Okay. Now let's look at Reliance. See, Reliance now it went up to daily chart. So the big picture, if you look at it, it is 2324 and this is the low, right, which is 1850. So 2324 minus 1850 divided by 2324. It's 20%, 22 to 23. That's why I said 12, 13%, then 20 to 23% normal is the fall. So this will be a very important area of support. So I don't think Reliance, being a big thing and influence, I don't think it's going to go anything much lower than this. So the Reliance is can hold at, so the intermediate corrections will come from where? Now something like 5.5, 12, 13%, right? So 23, 24 into 0.87 if you do it. Around 0.875, just 2.5%. That is 2035 or so. So one important support normally will hold around the 2035 levels. So this is the approximately this place. This is one place normally no, it could be an important support, and we have seen this place many times visited, resistance, support, broken, all these things many times it has happened. So 2024 is one particular place. And then probably this particular rise which happens, which is around 20 to 25, which is 5% from the top. So these are the areas normally you look. So somebody has done any mistake, you should keep averaging out at some low level. So as investment, as far as top stocks is concerned, you can split your investment up to 25% fall in the stock and invest maybe at 5.5%, 12, 13%. Then 17, 18% and 20%, 30%. So I think the average somewhere for Reliance, if you have done that, could be around 20, 30 levels or so. And then you can look at to what extent probably you can go. So the average level of fall you should consider and then go for an investment. So that is, as far as investment is concerned, it's quite simple. But as far as the trading, and so you don't need to put in a stop loss immediately. You can just, what you do is buy at 2030, 2035. Just look at something like 1900, 1950 as a place where you put in a tail end stop loss in terms of a put option. So if you are a trader, then in that case you have to look at whether you will end up with a choppy result. That's a problem, because a lot of times a trader makes less money than investor, because the investor has the patience, and with less amount of contract he can make more money than the trader. The problem for the trader can come because of the psychological reason. He puts a stop loss, he gets out, and then probably again fails to enter the trade. So that sort of a problem can come as far as the trader is concerned. So what best strategy that you need to adopt? We have to look at the chart, look at the pattern for each particular stock, how that particular stock behaves, and take a call. Nifty and Bank Nifty have explicitly mentioned that what are the points that you should consider. In the case of Reliance, I can tell you 12 to 13 points as far as intraday is concerned. If it is for the big position, normally the shift is up to 100 points. Now, if you look at this, something like an 100-point shift, see, this is 2030 or 2016, and it goes up more than that. So 21.34 or so is the close. So approximately more than 100 points shift, and then it falls, and then it rises. So now it has gone up to 2200. So probably the next correction can come up to 2100, and then probably we have to look at how the pattern spans over the period of time. So that is one way of looking at it. Or even if you put in this case also, if you put any particular indicator, when the markets go into such a choppy mode, trend following indicators also will not work. So you should keep both the trend following as well as the statistical thing. Whichever thing is going to work out, I think you should take it. In a far good trending stock, you can look at moving averages, because definitely before it becomes choppy, it will take moving averages will work. But once it turns out to be like this, then you need to be careful about using trend following indicators even for stop loss, because the moment it comes down, it will go up, moment it comes down, will go up, moment it comes down, will go up. So any trend following indicator, whether it's going to be moving average, whether it is going to be anything, I think that will have a suffering. Then in that case, you need to look at exactly how you should do it, whether you should just enough go with a bar chart indicator itself. Now in this case, let us look at the hourly chart. Now based on the hourly chart, if you look at it, say this is a high, and when it went up, and so it started to come down, so it is making a lower high. So lower high. So then in this case, you put a stop loss below, sell below this, and put this high, some points above this high as a stop loss. Okay. Now again, it goes up, then it looks like coming down. Put a sell below this and keep this high as a stop loss. Now here, if you look at it, this is trying to form a higher high, higher bottom. So this is the bottom, and this is the bottom, right? So it is forming higher bottom. So you can go on an hourly chart, you can go above this particular high and keep this low as a stop loss. Keep those low as a stop loss. So this is the way. Now in this particular case also, look at this chart. Now it goes above this particular high. Okay, then you go for a trade. Okay. Trade on the upside, because all higher bottoms are coming. So these are all trades where probably you can easily take. So based on this, you can have only this particular hour as the, so maximum that normally you should have as a stop loss is that you should not have more than 1 day. If you're a trader, you should not have more than 1 day range as a stop loss, or 1 hour range as a stop loss for intraday trader. Let us say the intraday trader, in the case of Reliance, should not have a loss of more than 14-15 rupees. 14-15 rupees. Okay. In the case of Nifty, if you are an intraday trader, you should not have a loss of more than 40-50 rupees. If you are a position trader, then in that case, you should not have a loss, which is, go to the day trade, and see what is the daily range, approximately average range. So this is all big range. So let us look at this day, which is 40 rupees. So if you are an intraday, if you are a position trader, maximum, the loss should be something like 40 rupees. If you are a Nifty trader, then the loss should not be more than 130, 140, 150 rupees, which is the maximum of a day range. Okay. So one particular day range should define you the stop loss as far as the trading is concerned. If you are an intraday trader, keep 1 hour range as a stop loss. If you are a position trader, you should keep 1 day range as a stop loss. Okay. If you are a weekly trader or monthly trader, you can adjust your position. That's how you should define the stop losses in terms of intraday trading as far as position trading is concerned. For investment, keep averaging it out at levels. Stop loss, please consider tail end loss for investment, which is in terms of a 50 moving average. Okay, so now time is 1:05. You can ask your questions now. Thank you very much. So the main takeaway from this session is, what is the stop loss? The stop loss should not be more than 1 hour range for intraday, should not be more than 1 day range for a daily thing. For investment, please keep 50-day average as a stop loss, right, in terms of going for a put option. Okay. Profit target, very difficult to say. That should be come in terms of a trailing stop losses. Okay. Okay, thanks for your participation. Stay safe, and we'll see you again on Monday. Thank you.